Hello there. One of the most important lessons we've learned from more than 60 years of portfolio construction is that diversifying your investments is a very good idea. Professor Martin Weber from the University of Mannheim is a recognized international authority on this subject. He says every portfolio requires a degree of balance.
Diversify is the key thing to investment. There's a big saying, diversification is the only free lunch you get. For you hate risk and you can destroy risk by diversification. That's the reason it's so important.
The next question is, how do you diversify? The important thing, says Professor Weber, is to diversify across geographical regions and different asset classes.
The idea to optimally diversify is that you look at different asset classes first and you diversify across different asset classes. And as the second thing, even within this asset class, you diversify as broad as possible.
Of course, the downside of diversification is that you're not heavily exposed to the sector that's about to enjoy big returns. But that's not the point. After all, nobody knows which region or asset class is about to outperform from one year to the next.
The beauty of the idea of diversifying that you always have some bad things and some good things happening, and there might be a bond bubble, there might be a gold rush, there might be all things going on. That's basically the idea of diversifying. You pick up with a passive diversified strategy. You don't care. It doesn't matter to you.
Most investors should primarily hold stocks as well as bonds to dampen the risk. But Professor Weber also recommends keeping a cash reserve for two reasons.
So it's basically the idea to reduce risk. So that's one idea why you should hold cash, according to your risk preference. The second thing is, it's a buffer. You need some money. Your car breaks down, or you sort of want to go for a big journey, or remodel your house and so on. That's a different need of cash. So for those two different reasons, you might want to hold cash.
So that, in a nutshell, is diversification. It's not complicated, but it's very sensible. After all, as an investor, it's better to be roughly right than completely wrong. Thank you to Professor Weber and to you for watching. Goodbye.